Hello everyone. The entire Dalal Street is buzzing with this IPO which has been floated by Zomato Group. In this particular video, I'll try to demystify the entire business model, what are the profitability numbers, and whether this particular IPO is suitable enough to be subscribed or not. The entire business model of Zomato rests on four pillars. सबसे पहला जो पिलर है वो है रेस्टोरेंट्स का कमीशन. So on these restaurants commission, Zomato makes close to about 85 to 90% of their entire revenue. The second pillar is the advertisements. हमने ये देखा है Zomato के ऐप पे there are lot many advertisements. All these advertisements also gives revenues to the group, which forms close to about another 10 to 15% of their total base income. The third pillar is the subscription. We have seen many partner programs which Zomato has been doing off late, and it forms not very considerable, close to about 5 to 7 odd percent of their entire fee income. And the last is the B2B model. Of late, Zomato has started working this business to business model, jahan pe they are providing daily vegetables and groceries to all these business outfits. Ye IPO, which is being currently been launched, is launched at the price band of 72 to 76 odd rupees. Any business model entirely depends on its customers for all their future growths. So in the financial year 18, as you can see from the first row, the monthly active users, which only signifies how many people have visited the platform of Zomato, was close to about 13.8 odd million. This number has skyrocketed to almost 32.1 million in the financial year 21. But आप ये ध्यान रखिए कि these are only people who are doing only window shopping. Most of them does not do any active transactions. So if you want to see what is the actual conversion, refer to the last row. So in financial year 18, the active conversion was close to about 6.5 million, while in financial year 21, this number was almost 21.2 million, which precisely means there was almost a jump of 226% in actual people transacting on this volume. This is actually very huge. ये बहुत जरूरी हो जाता है कि what is the average ticket size of the customer spends on the particular platform Zomato. क्योंकि Zomato का सारा income is based on the commission income, so they need to have very high wallet size और customer spending. जैसा कि आप देख सकते हैं इस particular graph में, करीब 2019 जून में average spend on Zomato was close to about 264 odd rupees. This has in the year March 21 skyrocketed to almost 395 rupees, again showing a jump of close to about 50 odd percent. Every order that has been placed on Zomato has its own economics of what is the cost and revenue that the individual platform is making from those orders. आप जैसा देख सकते हैं, in the year financial 20, the group was actually incurring a loss of 30 rupees and 50 paise on each orders. So they were not making any profits. However, the scenario has changed in the financial year 21. So on each specific orders, approximately the group is earning profit close to about 20 rupees and 50 odd paisa. As potential shareholders, I believe this is the most important graph one would be looking at. What is the company's revenue and what are the company's EBITDA? EBITDA is nothing but earning before interest, tax, depreciation and amortization. जैसा आप देख सकते हैं last row में, the company is in loss-making proposition. However, the losses have declined to a great extent. For the financial year March 2019, the losses were close to about 2,158 odd crores. It has now, in the year March 2021, come down to almost 342 odd crores. But the bottom line is that the company is still making huge losses, and one should be aware of this particular thing. So why is there so much buzz about the IPO after knowing that company is in huge losses? One can gauge the buzz around this market is just because of the financial strength of this particular group. The private equity infusion in the last financial year was close to about 6,600 odd crores. After this IPO infusion, the firm would be richer by close to about 9,000 odd crores. And it is also important to know that out of all the PE investors that have invested in this firm, only Info Edge is offloading their stocks, which is close to about 375 odd crores. This speaks volume of the financial strength of this particular company, and they have been able to draw huge financials from the market. Now, it is very important to understand the risk under which this particular company is doing its business. I think the first and foremost is the competition. We have already seen there is a huge and intense competition between both Zomato and Swiggy to acquire the market share. Of late, Amazon has also shown its inclination to come into the picture and take this particular market share as their own. The second risk which to my mind comes is the uncertainty. The government has already shown their displeasure about the way the entire particular model is working. Even the restaurants have started showing a very strong lobby about the kind of commissions these guys are forced to shell it out. The third is the losses. As we have seen in the earlier graph, all these companies are bleeding in red. None of these companies have still a green profitability in their balance sheet. So how long these particular losses are going to sustain is a matter of a concern. And the fourth and the most important factor is liquidity. So both losses and liquidities are interrelated. All these companies have been able to continue their losses because of the factors that it is a huge liquidity which has come from all major private equity investors. But all these investors also demand a very strict adherence to the compliance, and it is just a matter of timeline. If they start withdrawing their money from the company, then it can become a huge concern. The IPO without fail is going to be more than 100% subscribed. By the time I'm talking to you, the retail section has already been oversubscribed by 200%. So allotment is going to be very little even to all those people who intend to apply in the retail space. There is also a further possibility that there could be good listing gains as and when the IPO gets debuted in the market. But please try and understand that because of the factors that I have mentioned, huge losses that have been running to their balance sheet, the liquidity factor, it's a very high risk exposure. We don't know how the company is going to turn around the table and start delivering profit. So this has been an AI driven company and it's the first on the table. There's a huge rush and interest among the investors, but please be cognizant of the fact that this company is still in loss making and there are a lot many opportunities which are available out there which are being delivering profitability metrics for n number of years. So do your maths. There's no denying the fact that there will be a good listing gains, but do you want to have that only listing gains or want to have a good solid portfolio built up over a period of time? I think is a matter of concern which each individuals need to assess and take the call accordingly. That will be all from my side, guys. I hope this video might have put some perspective of this particular IPO that is being listed at this point of time. And you can take an informed call about whether you should subscribe or you shouldn't subscribe. Stay safe and stay healthy. Thank you.